Ladies and gentlemen, welcome to the Midday Market Madness. Actually, in fact, that's more like it. We need a little bit more red today. Hopefully everyone's doing well. Let's get into the news. So, first off, we need to talk about Microsoft. Microsoft, Meta, big tech in general. There's a couple other comments that I want to make about some other names like SoFi. There's going to be a lot of SoFi commentary today, as not only earnings is right around the corner, but we also saw Lending Club earnings yesterday, which proved to be pretty insightful. Now, let's go ahead and someone said Clarity Act. Is there Clarity Act news? I didn't actually see that. Ethereum's down 6%, so maybe there is. Bitcoin down 5.6%, $84,300. I sure hope this is not real. This could just be general pullbacks because the market is also sinking quite nicely. Let's go ahead and have a look. S&P 500 down 1%, QQQs down 1.5%, better than the 2.1% that it was down earlier. But let's go ahead and take a look at Microsoft, down 11.7%. I had to jump back in there and purchase even more. Now, I know constantly, just like Meta, last quarter, I said this is down way too much. Microsoft is having that exact same fears. Everyone is fearing the software name or software trade, the sort of SaaS names. I am not believing in this. Okay. So I ended up purchasing more Microsoft, some yesterday on the dip. That was about like $449 or something like this. And then I bought a little bit more today at about like $423, something like that. So we'll get our average down. But that was my entry into Microsoft. I also ended up purchasing more Meta yesterday. And this was, in my more recent video, my top four purchases for 2026 video that I ended up putting out. Meta was the number one name on that list. I want to talk about why I'm so excited about Meta. Let's go ahead and bring up Fiscal AI really quick, and we can take a look at Meta. Now, there's been a lot of upgrades on, from Wall Street, but I still don't think they're enough. So here, let's first bring up Wall Street. So where is it? I did save it, did I not? Okay, here. So Inner Circle was able to, or David Prince, I should say, but sort of put together a lot of the recent price target upgrades across different companies. So 850 from 815, 750 to 825, 835 to 855, just across the board, nice raises. But yet, I still think that they're being quite bearish. So whenever we take a look at Meta, last quarter might seem like growth is maybe tampering off a little bit, 23.7%, which is still super high compared to the rest of the Mag 7 names, outside of NVIDIA, of course. But whenever we go ahead, we can pull this forward and take a look at what they're expecting for Q1 of 2026. Now, this is Wall Street expectations currently at $51.4 billion. Now, this is the total consensus. So even though there are some analysts that have not upgraded or have not put out a report on Meta, it's still counted in the average if it's in the last 3 months of today. Like they count the average of the last 3 months. So $51.4 billion. But what actually was said during the call? If we just go ahead and look at guidance, Meta expects total revenue to be in the range of $53.5 to $56.5 billion in revenue. So let's just take it at the midpoint, even though they beat on the midpoint of guidance always. That places us at $55 billion, up from $42.3 billion. Do the math on that. That's a 30% increase in in revenue year over year. 30%. So where is all the earnings from, artificial intelligence? Well, it's appearing right now. There's not a line item in their revenue that says, oh, our AI revenue, our cloud-based infrastructure, anything like this. But what it ends up appearing as is more impressions delivered per person, and the price delivered or the price paid on those advertisements is also up. We can see that very, very clearly in the numbers as well. Remember, these are year over year numbers. So even if it was a 1% increase on pricing, it's still an increase on pricing nonetheless. But that's not what we're seeing. So let's go ahead and wipe this away. We will go to segments and KPIs. Sorry, I need this to be quarterly. And then worldwide ad impressions delivered percentage change, and then worldwide average price per ad percentage change. So the amount of ads delivered up 18% year over year. And then the price paid up and then an additional 6% on that 18% of new ads delivered. That's what the AI is going towards, right? Now, there was even some comments by Meta CFO that even suggested that they are going to have a lot of the data centers that they've been building online by the end of 2026. So then they will not be, sort of capacity constrained. So then they can actually push a lot more into some of their, new AI tools for advertisements, for shopping and commerce. That was another thing that was spoken about on earnings, potentially into glasses. That was another concern that was sort of cleared up by Meta, is that the potential losses from Reality Labs has hit a peak in 2026. Pretty nice. All right. Time to buy Microsoft. I mean, it's my time to buy Microsoft. I bought more Microsoft, I started a position in Microsoft, I should say. But this is just what I've been doing, right? Like, we bought Google, whenever it was in the 140s. Let's go back sort of maybe 1 year doesn't really show it. Let's go back to 3 years. From 204. So I didn't get this. Okay, wait, let me make this bigger. This run up, the people who were able to buy, Google in the $90 had amazing faith that Google was going to be able to clutch out, some pretty great products in the face of ChatGPT, who was a very competent competitor, especially at the time. ChatGPT was right at the top. They were talking about, making their own browser, potentially even buying Google Chrome, which at the time was essentially being litigated away from Google, and they might had to have separated from that amazing asset. Perplexity put in an offer for Google Chrome at $32 billion, even though they were valued themselves at $18 billion. It was a crazy time, okay? So, and then this even comes off the back even further of a lack of Google, new products that were being put out. Google Bard was absolutely crap, and Gemini, some of the first iterations of it were all right. None of it was really integrated into any of their other tools. Like there was, during a pretty crazy, I don't want to say woke movement, because that word and everything was oversimplified, but like Google contracts with the government were being protested in Google offices. Okay, whether or not you agree with those types of things, you can clearly see that that could impact revenue, profits, stuff like this, and that's just bad for business. So it was a bad time, and the believers in Google stuck through some pretty harsh crap. And right at $204, we ended up seeing things like, Perplexity and Google and ChatGPT and everything like this end up putting out some pretty great new products that look to essentially do what Google search is doing and help with live search and all of this stuff. And reports were coming out, people saying that they're not really using Google anymore. And this ended up falling down to, the 140s ranges. This is whenever I started to purchase. In this sort of range right here. Okay. So now what we ended up seeing is you were able to buy a $2 trillion business, which to many of the small to mid cap purchasers of stocks would say that's a, extremely high price to pay. And what are you looking to do? Just get an average annual return of 10%, 15%, which is probably what people are thinking right now whenever they're buying Microsoft, or thinking about whenever I'm buying Microsoft right now. I'm not looking for a 15% annual return on my investment. These companies are growing in, not high double digits, but high teens percentages of revenue growth. EPS continues to compound. Artificial intelligence is not a fad, and it looks like they could actually accelerate growth and margins into the future, even though we have to take a hit on margins today because we're funding a lot of that actual, build out. But every single company has to pay for that build out. Even if you're AI native, it's either you're paying for it or you're paying for it via equity, and you're having to dilute constantly if you're a ChatGPT, Anthropic, Perplexity, any of these businesses that are constantly dilutive. So what we ended up finding is that, yes, a $2 trillion business can still find its way to more than double your initial investment and find a $4 trillion price target. And honestly, we're going to see Google at a $5 or $6 trillion investment, into the future. How soon of a future? I'm not sure. I'm not sure that Google will continue to do as well as the likes of a Meta or even a Microsoft, just because of the recent sell-offs. I literally have had this conversation with Steven and Amit so many times over. I feel like there's this circulating investment where I always get to pick. Like literally, the people who have been watching me day after day, you guys know this. I said this about Google, or I said this about NVIDIA first. I was like, I can't believe NVIDIA is getting so sold off. We ended up selling Tesla, poured all my money into NVIDIA. NVIDIA makes up for 44% of my portfolio. That was at sub $100 range. It got as low as like $88. Okay. We bought into that during the DeepSeek moment, and turns out it was a complete, what's that principle? The Jevons principle, Jevons paradox, that the idea that just because the token costs of the models is going to decrease greatly does not mean that we're going to need less compute. It just means that it's actually going to open it up to many more use cases. We're probably literally going to have, 2 or 3 more DeepSeek moments that end up lowering the token cost and increasing the capabilities of artificial intelligence by roughly 10x, 2 to 3 more times. Okay. They're going to have scares in the markets, but at the end of the day, we're end up going to find more use cases. This is my personal belief. I'm not an oracle. I'm just, it's my belief. It's usually what we see through a lot of these big technological advancements is that we find breakthroughs, right? That scares people. Meta, last quarter, big sink on earnings, okay? And what we're end up going to have to see is that there was an amazing time to purchase under $600 and up into $650, and then bang, next earnings comes in. It was much better than we ended up anticipating. Let's reset this really quick. And growth continues to accumulate. They find new members. Somehow they found 7% year-over-year growth in total members. Okay. Meta did. Let's look at the difference of their total members quarter over quarter somehow. Just quarter over quarter. I mean, we could look at this annually, but segments and KPIs, family daily active people for their family of apps, year over year has gone from 3.35 billion people to 3.58 billion people. That's 230 million new people that they found year over year. I live in Canada. That's like 5 Canadas. They found 5 Canadas worth of people that weren't using Meta before. That's WhatsApp, that's Instagram, that's Threads, that's Facebook. It's pretty freaking exciting. So we're just putting this into perspective, And then, just as I thought, okay, well, now the Mag 7 names, the gap has been filled. on Meta, and I'm not investing in this name, mind you, for the investment of going from 600 to 730, right? That's not the investment. The investment is going from 600 to 1100 to 1500 in Meta eventually. You know, those seem like high prices to pay, but you realize that a lot of companies end up getting to those prices. They just end up having stock splits. And that's going to happen for Meta as well. Like this company is going to get up to $900, $1,000 per share. And then they're going to do a 10-to-1 stock split. And, you know, you'll be able to write more options on these names. That'll get more retail investors involved because they think that the company is cheaper because it's only $100, even though they're paying the same price that we did at $1,000, you know? So large growth is a $1.7 trillion business, but I don't see how, like, there's not a path that I think that there's a cap to their market cap getting to $3-4 trillion eventually if they can continue to grow and eventually turn those margins around and actually look for profitability. But Zuckerberg's a young man, you know, he's 42 years old. We're essentially going to have him for 30, maybe even 40 more years as an operator of this business. Maybe you think he's a lizard person. I don't know. Like everyone has a strong opinion about him, but like in terms of his ability to turn a dorm room project into a $1.7 trillion business, the youngest billionaire, the youngest operator of a $1 trillion company, it's phenomenal to see what has happened over time. Anyway, now the market has gifted us once again to say, hey, this trend of discounting and disbelief of Mag 7 names continues to happen, right? That Microsoft, after, mind you, having a pretty rough last, couple of months, ended up finding itself with an additional 11 to 12% sell-off. A name that I was already looking at. What am I possibly going to do? After doing this for 4 quarters in a row of NVIDIA to Google to Meta and now Microsoft, I'm going to once again invest into a Mag 7 name that people look at in terms and falls under the segment of software name of, hey, as Claude gets better and Claude 4.5, Claude 5.5 ends up getting better, you'll be able to essentially code your own versions of what Microsoft is charging businesses millions and millions of dollars to do. Yeah, right. How about that those, what's their employee count? Something like 60 something thousand. What's their head count? Do I have it here? Head count, employee. They must say it, right? Where's the employee count? 228,000 employees. That these 228,000 employees, one, can also get laid off, and we've seen that from Amazon countlessly, just recently laying off 16,000 people, that if they don't need them, if they don't need certain roles, that they have the flexibility to trim staff. Unfortunately, that sucks. But as a operator of those businesses or as a shareholder of those businesses, it's, that flexibility would be nice to have. And then those 228,000 employees, a large amount of them are extremely capable, AI, engineers are now gifted tools of artificial intelligence. I think that Microsoft's tools are only going to get better over time, let alone if you're maybe a believer of OpenAI or not. If OpenAI goes under, that business becomes Microsoft's essentially. Like, they own the IP, Microsoft layoffs are imminent. I mean, maybe, but you look at Meta, what Meta has recently come out and said was, hey, all of our employees have essentially just gotten much faster and much smarter and putting out more capable work. So why would we trim? We're actually continuing to hire. And they did see 6% increase in headcount year over year once again. They're like, okay, well, I'll just buy more or we'll just hire more because these people are working better than they were working before. should I buy more SoFi? So let's transition over to some commentary on SoFi. I have a hard cut at 2:30, so I want to make sure that we hit some of these topics, and then we can sort of chill down a little bit and talk some more Q&A. SoFi earnings are tomorrow. Okay. Tomorrow morning, 6:55 a.m. Eastern Standard Time. Right here, I'll be live streaming that. From 7 to 8 o'clock, we'll be going through the press release and the earnings presentations. And then from 8 to 9, we'll have the call. And then from 9 to 9:30, some, recap and what I think about what is actually happening. What was quite interesting yesterday is we ended up getting some insight from a business that's very, very similar in terms of a competitor to SoFi. Now, what's worrying the markets is that this company is down a lot. And so SoFi is not only seeing the brunt of the general markets selling them off and everything like this, but they're also not realizing why this competitor, Lending Club, is down so much. So Lending Club is an extremely small name, but it didn't used to be. It actually used to have a higher market cap than SoFi, right? There's a $1.9 billion business. It's tiny. And in fact, it's getting so small that I think SoFi should actually acquire them. Like, for real. Like, Lending Club, I think, has a strong balance sheet. They have good capabilities for personal loans and for new businesses like this. SoFi should just acquire them. They're getting too cheap now. But there's been a bunch of analysts that have actually come out and said that you should go long Lending Club and short SoFi, and those people have actually lost their careers because of it. David Chiavrini no longer covers SoFi anymore because of how wrong he truly was. So, yeah, I'm not saying that he actually did lose it, but he made that unbelievably terrible call, and clients that ended up following that advice would be, would have lost money from SoFi being at $4 going up to 24 than people that had just held both of them long. So the pair trades don't always work. Okay. So SoFi, let's talk about why Lending Club is down 14% today. We'll go back to Fiscal AI. There was two major changes. One, they are going to be going forward with fair value accounting as their principal accounting standard. Okay. This is widely hated. Like fair value accounting to companies like SoFi and Lending Club are actually very useful for them. But the analysts and all of this stuff absolutely hate this change. Okay. Almost the entire Q&A for this was talking about this accounting principle change. SoFi is in a unique position because, yes, fair value accounting is hated, but this is what they've been doing essentially since being a public company. So this is actually why, they've sold or were discounted to the rest of the market so cheaply, is because, for the last couple of years, they've essentially stuffed fair value accounting down the throats of analysts and investors and said, guys, we're not going to change, so you better suck it up. Similarly to like Meta's CapEx, it's like, okay, everyone can raise red flags about how much they're spending on CapEx. You know what? We're going to come out and say, Meta Compute, we're going to start doing hundreds of gigawatts into the future. Like, get used to it because we're not changing. So the world needs to change around us. SoFi has been hardcore on fair value accounting, and what's it called? The Lending Club, who was doing CECL before, ended up switching from held to maturity to fair value accounting. Okay, so the market actually is starting to go in favor of where SoFi has already been, but they're not going to get sold off for doing fair value accounting because that's the standard already for SoFi. So we're not going to get hit there. The next part about Lending Club, and another reason why they're getting sold off, is down 14.3% now, is because their chairman of the board, what is his name, Hans Morris, is stepping away. So management change, the fair value accounting change. No one likes change. what actually happened in the numbers? Let's go ahead and take a look. They are and we can take a look at the slides too. This is the exact business and why I got so concerned about SoFi offering personal loans and everything. Let me just drop that for a sec. If there would be a big change in credit card caps, this would affect names like Lending Club and SoFi, because that's their whole, like, this is their whole selling model. This is the Lending Club model. Take average credit card APRs, turn them into lower cost personal loans, and then offer really high savings compared to national banks. That is the SoFi model. That's the Lending Club model. SoFi does it a lot better. You know, the idea is the same. The execution, very different. Okay. Let's go back then. We'll go back to the AI summary here. Their originations in personal loans, mainly, just like SoFi, up 40% year over year. Okay. Full year 2025 originations up 33% year over year. So Q4 actually did better than full year, which means that originations were accelerating into the end of the year. Okay. Their return on tangible common equity was about 12%, more than tripling year over year. EPS, diluted EPS, doubling year over year. So margins are improving, EPS is climbing, originations are skyrocketing, mainly into the back half of 2025. Okay. Net interest income ended up climbing. The margin on that net interest ended up climbing, but on a year-over-year basis, not actually sequentially. So that's something that we're going to need to look for in SoFi as well. And then net charge-off ratios down 80 basis points year over year, reflecting strong performance across all loan vintages, meaning that the people who are actually, you know, using Lending Club loans versus the rest of their competitors are actually, you know, paying back their loans more and not defaulting. This is exactly what you want to see from SoFi as well. And these types of things, I think, are quite interesting whenever it comes to comparatives, like essentially seeing a market comparison. We're not just talking about execution, but the market comparison is that there was a higher interest for originations. There was also a higher interest for their marketplace of loans, which is essentially their version, little different, but their version of the loan platform business. Okay. They said that exploded this quarter. So the loan platform business for Lending Club exploded, personal loan originations exploded, margins increased, and they had a good time. They had a couple key things with their personal business. You know, chairman leaving, fair value accounting changes, all this stuff, pulling the stock down 14%. A lack of actual sequential growth from Q3 to Q4, but these are Lending Club problems. Okay. So, yeah. That's my take on SoFi right now. Is tomorrow we'll see if I'm right, but right now, it looks like their competitors are showing the exact thing that we expected, that defaults are coming down and originations are coming up. So this is another thing too. SoFi is down a lot from where Anthony Noto needs it to be. They've gotten their $25 performance-based stock units. They need to actually get $35 and then $45 by essentially the end of June of 2026. Well, it actually needs to be enforced before that. So essentially maybe March or even April or May to guarantee that he ends up getting paid. So this all comes down to guidance for me. SoFi guides so low constantly. In fact, you know what's actually really weird? Last quarter, I was going through and looking at their numbers. I actually tweeted about this. But if you were to add up, they put out like, oh, this is what we think we're going to see in revenue. And then they also said, this is what we think we're going to see in lending, financial services, and the technology platform. If you were to add up the lending expectations, financial services expectations, and technology platform expectations, which are the three segments of revenue, including the corporate revenue, but that's a easy math problem to do. You add all of those up, it didn't even equal their total revenue guidance. Like it was, they sandbagged so hard that they're not even double checking the numbers. So I ended up writing a tweet about this. You guys can go ahead and read it. I'm not going to show you guys the whole thing. Well, it's not even that long, but essentially they're saying financial services adjusted revenue growth is going to be between 60 to 65% for full year of 2025. Okay. I was like, okay, I ran the math on this. This is essentially what they're calling for based on their guidance. That was from Q3. In order to it just to be 65%, to bring in $1.355 billion in financial services revenue, you need them to bring in $270 million. That's it. That would add up Q1, Q2, Q3, and Q4 to $1.3 billion. This is not going to happen. Ever. Ever, ever, ever. This is Q4, where we ended up seeing holiday spending, an increase in brokerage revenue, a large increase in credit card demand because the 10% caps didn't go through yet. So that was a Q1. Like we'll see how Q1 changes to those types of problems. I think we're already seeing that in the job openings that they end up having. We see a lot of job openings for personal loans, for loan platform business, for SoFi Money, but not a lot for credit cards. So there's already been a little bit of a shift. But yeah, are we seeing a little sell-off right now? No. SoFi is coming down as I'm speaking. But the guidance sandbag is so bad, and they essentially what I'm calling for right here is I think that year over year, financial services is going to grow at 88%, not 65% or 60%. Let's go ahead and have a look at the markets. SoFi now down 1.2%, 2430. Yeah, I wonder if there's should I play earnings? What do you guys think? What? I did not press that. I pressed Meta. Meta's up 10% now. The shining beacon of the markets. Nebius, I'm pretty sure, has earnings. Is it next week or the week after? In the morning on a Thursday. So we'll have to take a look at that. Apple's today. We'll be live for Apple. Maybe I'll catch them all in terms of Mag 7 names. I don't think I'll have to, but Apple's going to be a hard one for me to want to pick up because what I really, really want to see at the end of the day, I think sales solves all. Margins can improve later down the line, but what you need is market share grab and in fast growing total addressable markets. I don't know if Apple is in that space anymore. Obviously they used to be, but now they've captured all of that space, and I don't know. I'm not as excited about Apple right now. We'll see. I sold cash secured puts at 22 for tomorrow. Dude, if we end up falling on earnings, like I was saying in the last live stream, like you can't control. There's a lot of things we can't control, right? We can bet on SoFi. I think that they're a great compounder of revenues and profits, and like we're looking at the company from the business standpoint of it, and I like what I'm seeing, But if Trump decides to go after Iran tomorrow, the same day that SoFi ends up announcing earnings, and it goes down, is that my fault? Is that Anthony Noto's fault? Do we hide away from investments because there's a possibility that other world events can happen on a day-to-day basis? I mean, maybe some people do, but I don't. Iran? What's happening with Iran? Iran down 5.6%. Let's see if I can find anything in the news, if anything just recently happened. President Trump says he'll announce the new Fed chair next week. Okay. NFL won't allow prediction market Super Bowl commercials. Oh, yeah. Taking a stance on gambling now, eh, NFL? Little late. Okay. Bitcoin, let's have a look at Bitcoin. 84,000. Actually broke below 84,000. Crazy. All right. Let's see. Microsoft, is this still selling off? Microsoft down 12%, back down to 423. Guys, it's crazy. Like, obviously, you don't have to be a believer in Microsoft, but some of these software names, like you're telling me ServiceNow, this company is going into the dumps. You know, 113.70 on ServiceNow. Even the best of the software names, like, you want to rank some software names, some of the most famous and comparable software names. You're talking about like Salesforce, probably the largest but slowest growing, getting sold off. You're looking at then the sort of middle tier, faster, more innovative name, ServiceNow, sold off. Fastest growing but smallest in terms of total revenue, Palantir, getting sold off. And by smallest, I mean smallest in terms of total revenue, not market cap. They're actually being, looked at a little bit differently. Gold actually coming back. This was getting a little bit of a sell-off, but people are not done with this gold and silver rally. Absolutely crazy. 8Co Holdings up 15% today on the idea that they are potentially, Sam Altman's going to start a WorldCoin social media, which has verification of human as being a need to start an account there. All right. I'm picking up Microsoft just like I did Meta last quarter. If this keeps dumping, I'll keep accumulating. My man, Mad Dog. That's what I'm doing, brother. Regulators launch a probe into Waymo after self-driving vehicle hits and injures a child in Santa Monica. Uh-oh. Not good. Not good. Guys, whenever I said that I liked Google, I meant more of the not hitting children part. That's not nice. I don't stand for that. I don't believe in that. Yeah, no, that sucks. Okay. Let's see what else is in the news. VG holding $9.70, up 2% today. Trinier as well, up 2%. Fair Isaac having earnings yesterday, up 2.4%. AppLovin up 3%. Honeywell, I'm pretty sure, had earnings this morning, if I'm not mistaken. They're up 4.4%. This is a good one of my buddy Evans from what's it called? Stock Market News. It's a big fan of this name. We concluded 2025 with strong results. Orders grew 23%, stemming from robust demand in the aerospace, tech, and energy and sustainability solution segments. As a result, we exited 2025 with a record backlog of over $37 billion, which positions us well for 2026. Honeywell up 4.45%. Okay. But the story is really on the Mag 7 names. What the heck is going on with Microsoft? What the heck is going on with Meta? You could probably follow and make a fortune buying Nvidia, selling it whenever Google sold off, buying Google, selling it whenever Meta sold off, buying Meta, selling it whenever Microsoft sold off, and see if the trend continues. SpaceX in talks to merge with XAI before this year's IPO. Crazy if true. But yeah. And then what? Tesla just bought $2 billion of preferred stock of XAI this quarter. That's honestly how he's going to get to his comps, right? He's just going to include all the companies into one business. And that's going to help get to that market cap of 8.5 trillion, as if it's not just a robotics and car company. It's a robotics, car, full self-driving, space, frontier AI company, which is pretty insane, which is absolute insanity. Down 2.2%. All right. Data centers in space. Looks like Elon's really going for it. It's going to happen. Data centers in space are going to happen. Some people ask me how that's going to affect like a Nebius or a CoreWeave or something like this. They're going to build, data centers in space as well. They're just going to have to partner with some of these companies to do so. CoreWeave ends up purchasing ASTS. No, who knows? Elon Musk, SpaceX in merger talks with XA. What do merger talks sound like? Is that like internal? Like he goes, should I do it? Well, I don't know if you should. Bro, they're both your companies. You do what you want. I'm guessing HUD under 100 soon. It was under 100 today, right? 99.20. Okay. He talks to both of you guys. He talks to himself in the mirror. Identical comments at the exact same second. I don't know. Maybe we could make little relationships here. We'll meet cute in the chat. Hood $95 tomorrow if crypto keeps falling. Easy read. I mean, yeah, it could be the case. It's just, does it change your opinion on the company going forward? Shark Ninja down 2.3%. Get out of my face. I like the company so much. I really do. But I just have no position. I've got no space in my portfolio for Shark Ninja whenever I see Nebius and Microsoft and all of these names taking hits. NBIS, Nebius down another 6%, $94 per share. What was interesting is there was comments made from Elon saying that they are going to cancel the production, like full, like they will no longer be selling the Model S and X because they're going to convert the Fremont factories to, look to help bump out more Optimus robots, which at the end of the day, I do think is the right thing to do for the business. If you believe that Optimus is going to make a lot more money than, higher end vehicles, right? The higher end vehicles sell to a very small niche audience. And then Marquez Brownlee, I think, accurately said, oh, the Roadster is so cooked. Like, yeah, why, if you're making these business choices to convert factories for the most financially optimal products that you might have into the future, why would they ever make the Roadster? And then Elon replied and said, the new Roadster will be incredible. Why? Why would you do that? You know, how does that make any sense? You're not going to sell the Model S and X, but you're going to sell a Roadster to an even smaller, nicher audience? Why not? Because according to them, their space and investment is limited. They don't have unlimited capital and space. They want to convert factories to, help get out more robots per year. The space production team, employees, all spending their time on new technology designed for the Roadster is, according to Elon, a waste of time. Not a waste of time, but it's just less efficient than focusing on Optimus. Ferrari competitor means nothing. He doesn't care. They're not, competing in F1. He's trying to make a ton of money and get to $8.5 trillion market cap. Robots are more important. Sad to see the Model S canceled. Best car ever made. I honestly think it, just like the old Roadster, there'll be amazing collector pieces, and it still will be considered, the best car that they've made. But you'll just have to go see people who have owned them to that point. Yeah. Tesla will never compete with Ferrari. Ferrari's in a league. You see all these people come out of the woodworks with their passionate, I mean, from the specs, it does look like it's going to compete, but we'll see. Do you think I can sleep well if I buy Microsoft today? I mean, we have a lot of hyped up BS out there. It looks cheap. I can't make that decision for you. Here, I'll show you guys this. I bought Microsoft and Meta yesterday. 95% sleep score. I can only speak for myself. I love the positions that I'm in. All right. What was funny is I was having a conversation with Stephen Fiorillo yesterday, and I was drinking like a Celsius at, I don't know how late we spoke, like 8 to 9, I think. Or sorry, 8:30 to 9:30, and I was drinking a Celsius. And he goes, you cannot drink that and have a good sleep score. So I sent it to him this morning, and he called me. He's like, for real, you need to teach me how to sleep. I was like, I can do that. How to test your sleep score? This thing right here. Whoop. High-end EV buyers are switching to Rivian. I see more R1s than Model S's and Model X's in Los Angeles. I'm pretty sure the numbers don't even justify that. But I agree, Rivian could be doing well also. But, yeah, I don't really have much to even say about that. I just think like the margins or just the amount of total sales is just not even worth it for them to do this. Like I was showing this off yesterday. Let's look at Tesla here. We'll go to their financials, segments, and KPIs, and then look at. Let's go to deliveries, or we can go to. Actually, let me go to this one first. So other models is Model X, Model S, and the Cybertruck. Okay. Look at quarterly. Let's stack these. The production vehicle that they are taking away is this tiny sliver of high margin cars, but this is the bulk of their business. And in fact, what Elon is saying is that this is going to turn into this tiny sliver. And then the next blue segment is going to be Optimus and Cybercap. That's going to be the business. And then not only that, then you end up getting into services like recurring revenue models, which is what all the analysts got wrong about Tesla is, oh, this at the end of the day, this is just an automotive business. It's not an energy company. This is not a battery company. This is not a robotics company. Well, it might be one day. And if they can get annual recurring revenue from full self-driving, from cybercab usage, whether that is, an Uber One like subscription or daily active riders, or monthly to annual subscriptions for Optimus, what is the price that you can charge? He can talk about $20,000, $30,000 robots. I think that's all BS. Why would you sell a $20,000 to $30,000 robot? Like, Elon is extremely good at selling something for what it's worth. If you have a robot that could replace human labor, you'd sell that thing for what, 50 grand, 80 grand, $100,000, $150,000 a year? Tanner, when do you think about getting back into Tesla? One day, just not today, because just like what we end up seeing right now is like, he is talking about such an amazing future and the stock doesn't even move, because the truth is that that future is already priced in. Like, people are excited, and yeah, either you believe in his future, which I do. I don't believe in his timelines. And I also don't believe that there's going to be no competitors. He can say what he wants about, Figure and Apptronic and all this stuff, but like, I think Google and Apple and all of these big, Samsung, I think a lot of these companies will get behind a lot of these robotics companies and help manufacture them at scale. Just like with ChatGPT. ChatGPT literally owned 95% of the LLM market, and they're like, wow, they have no competitors. Yeah, until they do. If you show the world a $100 billion market cap, or $100 billion total addressable market, you're going to have a ton of competitors. You show them a $1 trillion market cap, you show them a $10 trillion total addressable market, you are going to see every single competitor in the world. Just like you're seeing with NVIDIA, with Microsoft, Amazon, Google, Broadcom, AMD, all of these companies coming out of the woodwork, creating competitors to NVIDIA. They're extremely, extremely hard. I do believe in robotics for elderly. It's not for for elderly care, but it's for all business. Like, yeah, I don't know. As far as for bots for $20,000 to $30,000, Elon wants everyone to win. He wants everyone with a brain to have a chance to build on top of autonomy. I mean, for real, I don't believe that at all. He had given over-the-air software updates to increase people's ranges on their vehicles so then they could get out of a storm. Meaning that they were driving in a car that had the battery and the capabilities to go longer, but they were capped via software. He's not a I'm not anti Tesla at all, but like, he is a capitalist, and he is selling products for profit. What will you do with $20,000 janky bots at home? Janky. I'd have it clean up after. I've got cups and stuff in front of me. I don't want this here. Some robot comes in, takes all this stuff away, cleans up my desk. Go put it in the dishwasher. Meta's still moving. Let's see. Yeah, 10.4% back to we're gonna hit 740 here in a second. Let's go. Yeah, clean your snow or shovel the snow, cut the grass, water the plants, feed the dog. I can't wait. What's going on with crypto? ETH down 8%, 2,700, bro. 2,700. BMNR, $26.15. What if that Sean Farrell report of saying that, ETH's going to go down to 2,000, 1,800 is fully true, and Tom Lee made him change his report even though he was right to begin with? Congrats to people who bought BMNR. Ban that guy. Get him. I'm one of those guys, dude. You're making fun of me. Well, if the robot feeds the dog will love the robot and not you. All right. Scam Lee got me good. Yeah. Tanner, my point is that a 20K bot would not be able to do any of that. Not that we don't want it to, but 50K bot at best, probably like 100K. Well, I don't know. How are you doing that math in your head? Like, are you talking about the cost of the parts? Okay. Tanner's gonna buy a robot for Sauna Buddy. No. Okay. Mr. Beast needs to. He never will. He's never gonna pump crypto to his audience. It's never gonna happen. I know it doesn't seem like he's cautious about the companies that he works with, but he very much is. Mr. Beast, I mean. Add-on DLC to 100% this is gonna happen. 100%. Right now, I'm only loaded to do this and this. You have to pay for me to do snow removal and grass cutting and all of these things. Maybe. I mean, I maybe I shouldn't state that. Tanner's not giving the bear case with robots. What? That we're all going to die? Is that even productive? Like, oh, you shouldn't invest in Tesla because they're going to take over. It's like, it's going to happen regardless. So you might as well look at how much money they're going to make rather than if they're going to end our future. ETH absolutely dying in front of our eyes here. Really sad, but it's not alone. Bitcoin is following suit. I did talk about this. SpaceX in merger talks with XAI. I don't know. What would be the even the benefit of doing that? Like, sometimes whenever people are like, if Tesla comes together with SpaceX and XAI, then boom, it's going to immediately become a more valuable business. I mean, which is likely to be the case because it's all ran by the same dude. But you also have to factor in, like, those companies also have equity. So you'd be bringing over essentially a $1.5 trillion company into Tesla. So yes, it would be a $3 trillion business, but the stock price probably wouldn't move at all. But then you also get, the potential future growth of a SpaceX and an XAI and a Tesla, which are all probably going to do well over time. But Like, you don't just absorb those companies for free. Tesla down 2.4%. QQQ down 1.2%, which is actually improving. We were down 2.1% on the NASDAQ 100. Now it's slowly increasing over time. Tanner, do you have any idea if BitMine has data centers? No, they essentially are a revenue-less business. However, it would be sick if they did transition into like a Ethereum treasury / data center business. That's what CoreWeave was doing before, was back whenever they were on proof of work, they were mining Ethereum. Back whenever Ethereum was on proof of work. Now it's on proof of stake. And they just took their GPU expertise and just said, okay, we'll just, retool all of our data centers into making the world's best data centers of all time. Apple just bought startup QAI. Let's see. Apple earnings are tonight. We're going to see those numbers here very quickly. Yep. Apple is acquiring audio startup QAI in rare $2 billion deal. This is actually not that new. I saw this, but didn't actually read this. Apple rarely buys companies this large. Audio company for physical AI use cases where sound, spatial awareness, and real-world interaction is going to happen. Interesting. I don't have any comments. I'm not a follower of Apple at all. Yeah. Tanner, that's like saying global warming is inevitable, so why bother? Well, I don't really think that's the same as saying robots are going to take over. I mean, I'm sure that the safety precautions and stuff like this are, hopefully going to still take place. But I think that's like saying global warming is going to happen, so never invest in any energy names or gas companies or any company that is engaging in anything that could harm global warming or something. Like, just, I don't know, be like Microsoft, plant more trees. Like, what can you do? They don't even say global warming is climate change. I'm not even worried about it. I'll let someone else figure that out. I'm not here to figure that out. I'm here to figure out how to make money. Okay. At some point, you got to trust someone else to do their job, and somebody's going to figure that out. Not me. Y'all ain't seen beep yet. Here's the thing. Here's some great, like, I actually think Stock Market Nerd posted about it as well today. But like, whenever you start seeing people say like, oh, we're going to see 1,000x returns, 100x returns, like, we're probably near the top. We ended up seeing that from like Eric Jackson with Better Homes and Open Door and all of this stuff. Like, he was calling for like 300x returns over the next 3 years on all these crappy companies that don't really have a straight path to profitability. Okay, there's a possibility. I'm not taking that away, but it's possible. On the other side, you have people that are always saying, oh, this is going to get so much worse. Like you guys haven't even seen what a drop looks like. Like, Microsoft down 12%. Wait till it's down 40% in a day. There's a middle ground that is important, that like, the world's a lot of gray area. Not everything is going in a certain trend. So just because we ended up seeing a large sell-off doesn't mean we're about to go into a months long, 40% drawdown on Microsoft or 60% drawdown on Microsoft or something. Sometimes this can just be a hiccup. Stocks correct. We end up seeing from time to time that we see 10, 15, 20% corrections, and those are healthy. Not everything is doomsday, especially as companies are more profitable with more customers. I need that 40% decrease in Microsoft. You say that, but then people don't buy it. People go, no, it's going to go way worse. You'd see a negative 40 on Microsoft and then ask for 60. Company's down 12%. This $3 trillion company had a $400 billion haircut on improved earnings and improved revenue, which means not only did it just get cheaper, on a multiples perspective, it just got way cheaper. Like way cheaper. Like we're probably looking at a company since yesterday that's probably 15, 18% cheaper because earnings improved, right? So price to sales would have went down if it stayed flat. Price to earnings would have went down on net income because net income boosted up if the company stayed flat. Plus they bought back stock. Plus the total outstanding share count of Microsoft went down, which means the multiple, if it stayed flat, would have improved. So if this is correct, which I need to double check, it's saying Microsoft's PE is 26.5 times, which would be laughable. Let's go check the Mag 7 names real quick. Look at this from a PE basis, and we'll add on why isn't it showing me all the names? Yeah, look at this. Look at this. Oh, God. Follow my eyes. Okay, so we look at the most recent quarter because of earnings yesterday and the sell-off. Now Microsoft is the cheapest company in the Mag 7. This is so small. I need to zoom it in so much. I got to talk to the Fiscal AI guys. They're making the text too small for my stream. Microsoft is now at a 26.5 times PE. Above that, Meta, 31.4 times because of this big spike up. Then Google, which used to be by far the cheapest, last quarter is by far the cheapest. That ended up changing pace really quickly. Then Amazon, Apple, and then all the way at the top, NVIDIA. This was on a trailing PE basis. So let's go ahead. We'll hide that and we will show forward PE. All of a sudden, Microsoft has quickly become, overnight, the cheapest name from a forward PE basis down to 24.5 times, Meta at 26.1, then NVIDIA at 27.2, then Apple, Amazon, and Google, which Google, by the way, back in the day, used to be the cheapest. This is just from a quarter ago. They went from a 22 times forward PE to 31 times. I'm just looking at the numbers here. You're like, you guys can choose to do what you want with this information. I'm just having a look. Total revenue percent change. No, not for. I don't want to see forward. Okay, well, the problem is that some of these companies have shown off forward earnings, like Meta and Microsoft have shown off numbers, but they're giving us estimates for Amazon, Apple. So this isn't the greatest chart to look at. Plus, NVIDIA throws off everything just from growing at, 65+% rates. But yeah. New is running. That could be that's what we should check on too. I mean, yeah, new is running. Oh, now sinking. Must be on low volume. I'd have to see that here. Okay. So quick reminder, I have to have a hard cut at 2:30. Maybe we even leave before that just because I have another meeting right at 2:30. Um but what's it called? I'm just not concerned about these mega tech companies that are selling off. Let's check the DXY really quick. See how that's doing. Measuring the dollar still at 96.20. It's not great. I mean, you look over a 3-month timeline, this can be quite bad. You know, we end up taking a look in the last year or so. It's not the first time that it's had like a hard drop. So um, here was the problem. Whenever this was at about 100, things were fine for Nubank. Then this increased a ton. This was terrible for Nubank because they end up making Brazilian reals and Mexican pesos, Colombian pesos, and everything. And then whenever you convert it back to US dollars, which is what they report in, the numbers would say, "Hey, we grew." Like this is what they ended up showing in Q4 of 2024 was like, "Hey, we grew by 40%, but on a American dollar basis, once we have to convert the dollars, we only grew by 13%. That's what happened. But whenever this happens in reverse order, then what you end up seeing is like, okay, well, they're going to end up showing off that they grew by 40%, but what they're actually reporting in is maybe 50%, which could be beneficial. And since I've said that, all the gains completely erased. Markets move quickly, I guess. All right. New applied to U.S. bank charter. You think they get it in 2026? Probably not. I mean, the problem is that we have a completely new administration and, some commentary about like wanting to deregulate and make it easier to become banks and all this stuff. So maybe it's quicker, but usually you'd see like 18-month timelines on this sort of stuff if they even do get it. Can you analyze Zeta? No. I've had my look at Zeta. They look like a great company. I'm just not investing in them. Like the numbers are good, but I find it hard to invest in like B2B businesses that like same reason how you could get burnt on like a trade desk or something like this, TTD, is you don't really have a lot of information on this company until the earnings are reported. So you see these massive gaps. These were earnings reports. So right here, they ended up reporting earnings. It was a huge miss. Company went from $120 down to 82 the next morning and then fell all the way to 43. Okay. Then next quarter ended up believing or made us start to believe like, oh, okay, that was a one-time incident. But then they ended up seeing a second quarter. Then in this same period, this sort of period, they've had 2 CFO changes. Earnings are looking worse and worse and worse. And it's so hard to get visibility into this business because, well, we have to wait for these quarters. Like, look, this massive draw, then massively up, then massively down, all in single day periods. I don't like that. Maybe that's good for people that want to play the options and stuff, but what I want is a long-term, compounder of wealth. So I don't like buying into these businesses that are changing so quickly, have huge companies that they're against, like Google and Amazon. Amazon literally came out and said, like, hey, we're so confident against the trade desk that we'll pay for your campaign on the trade desk just to show you that we will outperform them. What? Why the big drop on Palantir today? Also, the same sort of B2B companies, you can actually find a lot of alpha in them as well, because if you do find a great name like Palantir and you only get so much information each quarter, then they end up showing off earnings that are better and better than expected, then you could see big jumps constantly to the upside, which is what Palantir has seen. But now they're like every software name, every tech company is just sort of getting obliterated right now. Yes, I covered SoFi. Go back to somewhere near the beginning, 20-minute range. I actually think 20-minute. Tanner, will you buy Apple stock if it drops 10%? You know what? Surprisingly, no. Not unless they show that they can grow to like, I don't know, like revenue increases and stuff like this to double digits. Like, I think sales solves all. I don't like Apple because they honestly just have such a massive amount of sales existing already, and in areas that I don't think are going to be, super compounding for them over time. They've canceled some of their recent projects. I'm just not a super fan of Apple. I don't use their products. Tanner, how many monitors do you have? You're always looking up and all around. I've got one here, one here, one here, and one here. And they're pretty, so they're 27 inches, but they're close to my face. So they kind of take up like that frame of my view. It's almost my entire view. So yeah, it's a lot of doing this whenever I'm looking at stocks. So my stocks are up here. So I can do that up here. So yeah, it's a lot of looking up. And then I get neck problems. Who could have known? More monitors means you're more cool. I know, right? I know I've got switchers in front of me and an iPad to do other stuff. So, four monitors and another screen, and all it does is improve my coolness. You see the way my girlfriend looks at me whenever the stream ends. She just, can't get enough of it. I'm the cool guy. By the way, I almost wanted to make a YouTube video on how good my sleep has been. I never will. You never will hear that of me, but yeah. Get your sleep in, ladies and gentlemen. It's so great to feel this good after a nice night of sleep. Tanner, you are AI. I've been watching a lot of AI videos lately, and I do get concerned. I watched some like Pablo Escobar video, and then could just tell that like the whole video, the script, the way that they were talking, it was all artificial intelligence. But it was based on a real story. So I was like slightly enjoying it, but also I could tell that there was absolutely no life or flavor in the video. But yeah. So this is the thing. It's the verbiage. I can show you it. It's absolutely not an iPad, but I say iPad because that's what it's called. Like it's like saying take an Uber. It's actually, I think, the Samsung Tablet 7 or whatever. But iPad is just what you say. Like iPad might as well be the Kleenex or the Frisbee of the flying disc. No one's saying flying disc. You say Frisbee, but not every Frisbee that you're throwing is a Frisbee branded Frisbee. Yeah, Band-Aid, Q-tip, Frisbee, Kleenex. It's just what they're called. The Xerox, bro, no. You have exposed your age. It's time to go back. No, I'm kidding. But no one says the Xerox. Yeah, I'm going to go Xerox these pages over here. No way. It's called a printer. No one says the Xerox, bro. No one says that. It's true. I know it's true. Xerox is one of the greatest like studies of like companies that have just taken a fad and ran with it so much. Like one of the greatest companies to research of all time. I love the Xerox story. Xerox is an everything thing. Photocopier, printer, scanner. It's the big machines, put it into corporate offices. They charge for a ton of maintenance on those machines, and only Xerox approved people could go and run them. They made a ton of recurring revenue. It was an amazing business. Tanner the ageist. No, I actually I think the average age of the people that watch is way older than myself. But if I catch old people, I'm going to call it out. And this right here, this is an old person. I caught you. You were trying to say 6, 7, and I caught, and I, you know, I've noticed you in the bushes. Run a poll for the ages. I don't need to run a poll. I get all this information from YouTube. I can show you guys. Here. So, I don't think this is showing anything bad. So I got to zoom in because I can't show too much here. But female 7.1%, male 92.9%, 3.8% 18 to 24, 25 to 34 23%, 35 to 44 30%, 45 to 54 22.9%, 55 to 64 13.7%, and 65 plus 6.4%. So it is mainly, older generations for sure make up the bulk of the channel. Okay. I'm in the 3.8%. I mean, that's mentally how old are we? Yeah, YouTube doesn't tell me that. Absolute sausage fest in here. Usually I think we have a lot of ladies in the chat, but I actually think that they comment more often. Like Mary, Lisa, Kelly. I find, Michelle's in chat a lot of the time. The 3.8% crowd, like honestly, good for you guys. You guys are really, really trying to get ahead of your like financial lives, understand what the markets are doing, and realizing that if you start buying these names like Meta early on, these can compound into some serious wealth over time. Making up names, they're literally in chat right right now. Lisa was in here too. Yeah. Michelle bakes cakes. I see you guys. Amber. Not making up names. What's another name like Meta? They have a term for it. The Magnificent Seven, baby. Apple, Google, Nvidia, Amazon, Tesla, Microsoft. I think that these companies will be around for a very long time. Okay. I'm 55. I think who's older than 84? I think we've seen um some 84-year-olds in chat before. I don't know if we have had someone older than 84. I'm sure we have. Like the stock game is a you know, 87. I'm 86. LOL. I'm 96. I'm 173. All right. Well, it was a good question for me to ask. I appreciate the responses, guys. Thank you. Okay. You mean birth year, right? No. Tanner, you decide, do I trim Zeta for more Microsoft? I'm not going to describe or decide that. So let's move on. Okay. So, oh, wow. I have to go. Okay. I've got a meeting. SanDisk tonight, Western Digital, Apple. Okay. Wait, do we actually listen to the Apple call or do we listen to SanDisk? Ooh, now I'm, now I kind of want to listen to SanDisk. SanDisk to 800. Well, then you would want me to listen to SanDisk. Apple. Okay, wait. Can we run a poll? Hold on. Please let me know, because then this will be the deciding factor of what we listen to. SanDisk might be a little bit more explosive, but Apple, I think, is more important to people's portfolios right now. That's sort of the way that I'm thinking about it. What earnings call to listen to tonight? Apple or SanDisk? Amit will do Apple. I don't even know if that's true. Here, wait. I'll text them. Are you listening to Apple or SanDisk? Are you writing solo tomorrow or with your ex friends from the Friday show? I will be doing it with them tomorrow. Okay, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But until next time, which is tomorrow morning. Actually, well, Apple or SanDisk earnings. Bye for now.